Welcome to the Liquidity Event, a show about all things personal finance with a laser focus on taxes, financial independence, and equity compensation. Hosted by AJ and Shane of Brooklyn FI, each episode will focus on a personal finance topic, some driven by news headlines and sometimes driven by listener questions. And sometimes you'll just get two money nerds rambling about what they think is interesting. Just a quick note before we get started, this podcast is for informational purposes only and should not be considered tax or investment advice.
Hello, and welcome to the Liquidity Event. I'm your host, AJ Ayers.
And I'm Shane Mason.
And this is episode 170, being recorded on December 18th, airing on January 1st. Happy New Year. Happy 2026. I hope we make it. Email us your finance questions at liquidityevent@brooklynfi.com, and we will answer your questions live on the air. How are you doing today in December, even though it's January, Shane?
I'm fine. It's Shane from the past. Coming to you live.
This is perhaps the only way that we could have possibly recorded a New Year's episode, not hungover, by recording it at 11 a.m. for me on a random Thursday in December during the busiest week of the year.
You know, I'd say I'm more likely to be hungover on a random Thursday than New Year's Day. I really don't like New Year's Eve anymore. I don't know what happened.
Yeah.
I don't go big anymore. I spent one of the best New Year's Eves I ever had. I fell asleep at 10 o'clock in Zion National Park with my girl. We woke up in the park, in the lodge at like 6 a.m. It's one of my favorites. But I don't know. What do you have? Have you get booked? We're trying to book something for Northern Italy in Verona. This might be dropping while I'm living in, or I'll be waking up at an Airbnb in Verona. We're trying to do just like a dinner with champagne at like 10
Gotta
o'clock.
get a balcony, Juliet, Romeo, right? Verona? Romeo and Juliet?
Yeah, they have that there. We're probably not going to be on that balcony at New Year's Eve.
I don't know.
I got to do my research.
Yeah, that's a lot of research you got to do between now and it's 12 days from now. Cool.
What's the request?
Just you're planning your trip. Not a request, just a little last minute travel for you.
Yeah. What research is there to do on Verona? That's where the Romeo and Juliet happened?
I don't know, just like dinner reservations, hotels, flights.
Oh yeah,
all that good stuff.
That's all booked. It's just
okay.
Yeah. You can feel free to message the girlfriend if you want something like that handled. Feel free to forward. I'll forward that along, AJ. See how that goes.
Understood. Well, I am with you on New Year's. Although I did have a party last year. Like I like hosting a party on New Year's, so I don't have to go anywhere. And we can have like shrimp. I'm a big fan of like seafood on New Year's, so like oysters, shrimp cocktail, crab legs. But by the time this podcast airs, I will have hosted 2 holiday parties. So I think a third one is maybe not in the cards. So we may be canceling our New Year's plan. So I will have to update everyone next week on what we are doing for New Year's. But today,
did you have one last Friday?
I did have a party last Friday. Yes.
Yeah. How did it go?
It was awesome. It was so fun. It was a banger. 8 pounds of shrimp cocktail. Nabil made his famous Chatham artillery punch. Everyone had a great time. A great time was had by all.
Sick.
Today on the show, folks, we've got charity and AI, rich New Yorkers threatening to leave the greatest city in the world yet again, and don't invest in fake companies from China. I have an update for our listeners on my grill that got delivered yesterday. It was delivered and does not work. We have tried everything. We have tried YouTube. We have tried going to the hardware store and showing them a video of why it does not light. It lights, but the flame does not stay on. So I invited some folks over for a barbecue last night, and then at 5:30 had to call an audible and go to their house to barbecue at their house because my grill did not work. And that was a very
So sorry.
Yeah.
What are the theories? It's got to be a hose, or
we think it's some kind of like safety setting or something. It doesn't feel like it's broken. It doesn't feel like it's defective. It just feels like there's something we're missing, and no one can actually figure out what it is because it's all 3. It's happening on all 3 burners. So I think this is a user error issue.
It's missing charcoal. No, I totally understand the gas grill situation. That's just they are a little bit more complicated, but they are faster, to your point.
Faster. What did I say?
So, yeah,
What did I
I know
obnoxiously say last week? I was like, I run 3 companies. I don't have time
yeah.
for charcoal. It's true. Like,
Oh, dude, I woke up in the middle of the night. Last night. I was like, somebody was bitching about running 3 companies in my life recently. It's like this bitch on the podcast, my bitch.
this bitch that I
Thanks for the
run 2 of
reminder.
those 3 companies with.
You don't have 15 seconds to light the charcoal. What a weird flex. You should do it in other ways. My buddy just asked me, he just sent me an
Wait,
audio
I'm
message.
sorry.
He's like, hey,
15 second. To be clear, the problem with charcoal is not the lighting of the charcoal. It's that you have to let it like get to the brick state. Like that takes like 20 minutes to like get it going.
Thanks, Grill Master.
Right?
Yeah, I'm aware
No, I'm
how
asking.
charcoal
I'm
works.
asking. No, I'm not.
You just walk out there and light it, and then you continue with your podcasting, and then 20 minutes later, it's good to go. It's a passive thing. But yeah, it is. If you forget, then you're fucked. It's like taking a chicken out of the freezer. You got to make everyone wait for you. So I totally get why you do it.
Okay.
I would do that too.
Thank you.
Because you run three
Because I run 3 damn companies.
My buddy just asked me via audio message. He's like, "Hey, I'm trying to get an Airbnb in Mexico City. Could you go over there? It's close to your house. Can you go check it out for me?" And I'm like, "Dog, how have I been so nice to these people in my life in the past and people pleased, where they think that I have the free time to just go
You know what?
scope out an Airbnb? It's got photos everywhere."
You know
Julian,
why?
if you're
I know the
listening,
answer.
I'm sorry, dog. I'm
Because
not
you
going
used
to
to do
check out.
you used to do taxes for $100 a pop, and now you let people walk all over you, and you
8 years
can
ago.
never go back. You can never
So
come back
long
from
ago.
that.
Good
All
God, the
right.
things we would do to get started in business.
Indeed. Okay,
Yeah.
speaking of taxes, we did not get to this 2 weeks ago, and I'm very excited to talk about it. It is our favorite, well,
Right.
2 of my favorite topics, taxes and my beloved city of New York City. We've got this article from the New York Times: rich New Yorkers threaten to leave, then they find out how hard that is. That is the headline. Tax accountants and lawyers detail the arduous process wealthy New Yorkers would have to face to avoid paying New York state and city taxes. Now, one thing I want to point about this article is that, as I think Caitlin, our director of planning, posted this, and I clicked on the article and I was like, hey, I know that guy. The featured tax accountants and tax lawyers in this article are none other than Mark Klein and Timothy Noonan. I believe you introduced me to Noonan's notes like 10 years ago. He's a super, super brilliant tax mind who helps folks understand tax law and obviously pay as little as possible within legal reason. And Mark Klein from a firm, Hoggs and Russ, we personally have worked with them, and a ton of our clients have had great success with them. If you are in fact going to move out of New York City, you need to get a tax lawyer on your side because, as this article illustrates, your chances of getting audited for your residency are very high. Shane, tell us about New York State residency and New York State residency audits. You have a ton of experience in this department.
Yeah, that's true. Actually, our entire firm has a ton of experience with this at this point because we have dealt with so many audits. I mean, one of our tax managers, Kelsey Dumo, is actually awesome at dealing with these at this point. She's dealt with a lot of them. But yeah, over the years, I've just been a New York State CPA for so long, helping high-income New Yorkers deal with residency issues. And yeah, it's an incredible threshold to jump through. It's really interesting, actually. Like, I think one of the main things I love about being a tax accountant is that it's really good for like an engineering mind where they see a problem and they see a system and they want to try to solve that problem and solve that system. And this is like one of those systems that can be solved. I think a lot of lawyers deal with this, doctors deal with this stuff. I mean, really just anyone in the white collar knowledge working space deals with this type of stuff. In this case, there's 2 types of thresholds or tests that you need to satisfy in order to break your residency with the state of New York. And breaking residency with the state of New York in terms of a tax residency, which is different from an actual like home residency. You can have a home in New York and not actually be a tax resident of the state of New York. And people want to do this. We get questions about this all the time because the taxes are high in the state of New York. So if you can break tax residency, then you will probably reduce your overall burden to the common collective, so to speak. And yeah, we get questions about this all the time. There's somebody in the article, another tax residency expert, that says of the 10, if 10 people ask me how to break New York State tax residency, only one of them
Yeah.
actually pulls it off because of how cumbersome it is and how hard it is. If I can go on a tangent for a second, there are two
It's a
different
bit late for
types of,
that.
yeah. Yeah, there's two things that we really need to satisfy in order to get out of the New York State tax residency, and there's a statutory test. There's really like a quantitative test and a qualitative test, and the article really leans into like the qualitative stuff, which is what makes it really fun to read this article, at least for nerds like you and I, because they ask you questions in the qualitative tests like where do you spend your holidays, where do you stay after returning from an overseas trip, where are your dog's ashes? Luckily, I'll never
You'll
have
never,
ashes of a
ever.
dog because Charlie will never die.
Is he in one of those dog longevity programs? You got to get him in one of those.
Dog longevity
Have
program.
you heard about this?
The dog longevity program he has is that I walk his ass for 3 hours a day. He's a baby. He gets everything he wants. No, what's a dog? Let's break the tangent here for a second. What is a dog longevity program?
I just know that there's a lot. Obviously there's a lot of research into human longevity. Anyone who's trying to biohack and extend their lifespan, health span. Who's that guy? David. You and I both read that book. Health span, lifespan.
Attia.
Peter Attia. There is a lot of research that is being done on humans, but there's also a lot more research being done on animals, aka dogs. So there's actually a few startups that are actually selling drugs to potentially extend the health span and lifespan of your dog. So a lot of those were in early tests, but I've seen a few of startups pop up from actually potential clients being like, hey, I work at this like crazy dog longevity startup. So maybe we can use some of that research. We can use what we learned from dogs and apply it to humans. But anyway, speaking of humans, back to New York City. My big takeaway from this article, which is always my takeaway when people call us and say, hey, I don't want to pay taxes in New York, help me avoid them, is like, why? Like, you make $2 million a year and you're worth, let's say, $30 million. Why do you want to leave the greatest city in the world? Is it just because you don't want to be a sucker? Like you don't want to? Is it the idea of paying taxes that people are so allergic to? And this article kind of leads you to this conclusion that there was a lot of like uproar because like Zoran's going to be mayor and he's going to, 2% is going to, an extra 2% tax on all these millionaires. If you make $2 million a year, 2%, not very much money, right? A couple $1,000s. Like, why are we hemming and hawing? Why are you going to uproot your entire family to move to Florida just to save taxes? And to your point earlier, Shane, like all the tests, the question I ask prospects, like, I want to get out of New York. I'm going to go stay at my parents' house in Florida for 2 years. And it's like, well, are you coming back to New York? They're like, yeah, of course. I'm not gonna live in Florida for the rest of my life. It's like, well, you're not leaving New York. You have a temporary sabbatical in Florida, but you're coming back to New York. And that is why most people fail this audit test. Isn't that right? Like that's how the auditors get them, which is like, oh, you're literally never coming back to New York ever. You got a storage unit of your stuff up in Harlem. Where's that go? Are you donating that? What's that for? Why is that still in New York? And that's usually where they get us.
Are you donating that? No, they're not donating that. Yeah. Yeah, that's the thing. You always have to leave and land, as they say. You
Yes.
can't just leave. There's a lot of people that were leaving during COVID, yours truly included, that became kind of nomadic and went to Tennessee, went to California, went to Ohio. This isn't me, but just like, went to Europe, Asia. People were all over the world during COVID, but they didn't actually land anywhere else, which is the second hoop that you have to jump through. So unfortunately, there was a lot of people that thought that they had left the state of New York. Even people, I think, that even fired us as advisors because we would not essentially file a tax return.
A fraudulent tax return, basically.
Yeah, I mean, fraudulent's a pretty hefty phrase. That implies a requirement or like an intent to deceive, which you could potentially argue. But yeah,
I mean, that's what it is. It's when your financial advisor, your credentialed professional tells you this isn't a good idea, I'm not going to sign it. That's usually a good indication that you shouldn't do it, and it's probably against the tax code and or the law.
Yeah, that's It's a pretty good indication.
So I don't know if fraudulent is exaggeration in this instance, but I hear you.
Yeah. I think we got fired like a month ago, actually, for somebody that wouldn't let us file a return against our, we're not, I wouldn't call us aggressive, but we're also not doing Hillary Clinton's tax return. She famously filed a tax return where she took no deductions on her Schedule C for public speaking, which I found very interesting. Something you just have to put up with or at least you used to have to put up with when you were the president or wanted to be the president of the United States.
Yeah.
So, yeah.
Can we double click on that for a second? Because this came up recently
Sure.
when I was talking to a potential client about how aggressive are we as accountants? And I think that is actually an interesting question, because accounting there's not a lot of gray area. It's like, this is the law, yes or no. However, when you get into these large numbers and people are trying to avoid taxes or move it around and move between businesses, and the tax law changes every 5 minutes, you do get a spectrum of the type of accounting that certain accountants and tax filers and preparers do. And I would say on one end of the spectrum, you have your, let's call them the ultra aggressive filers and CPAs who will just say, give me your expenses. We can deduct literally everything in your life to bring your income down to zero. And people are very excited about having this kind of tax preparer because they go, my guy's great. He got my taxable income down to zero. And you and I, as a different kind of tax preparer, know that is not the way to run a business. In fact, you're just running lifestyle and excluding yourself from earning Social Security and earning any retirement benefits in the future. So that's fun. I would say Birthright is pretty middle of the road. We're not ultra conservative, like you said, like not even taking deductions that you're entitled to. But we are not of the let's test the limits of the law, mostly because of this article, mostly because New York is a very well-funded audit state. There's a lot of auditors. We have seen audits come across. We don't see a ton of federal audits. Have you ever seen a federal audit for a Brooklyn FI client? I don't think so. Right?
We've had correspondence,
Yeah.
We've had, of the 5,000 tax returns that I've filed, I mean, I don't know the exact number, but it's got to be up there. I've only ever seen audits come in the door for me to handle them when someone else has been audited first, and then they come to me and they say, hey, can you help me out with this audit that's happening? And it's usually because somebody frankly goofed it.
Yeah.
The IRS has they don't have any staff. They're not auditing people. If they are auditing people, it's like extremely high income people that have been exceptionally aggressive. Honestly, the people that get audited the most statistically are low income Americans, unfortunately, because they file for the earned income tax credit, which is a transfer of wealth to people that don't have very high income, but they have kids.
Yeah.
So they audit them to make them provide documentation, or AKA a correspondence audit, where they just send you a letter that says, hey, we decided not to give you that thing unless you can provide this thing, which is kind of like voter registration. It's a very typical low cost way to make sure that certain loopholes haven't been abused, but it ends up excluding a lot of people from welfare that they need. So,
For sure.
Yeah, statistically, yeah. In terms of the traditional audit that everyone envisions, where there's a guy with a gun at your door, those don't happen very often.
Yeah. However, these residency audits do happen. This article cites the statistic that if you are reporting more than $10 million and you used to live in New York and you have now moved states, the odds of you getting audited are 100%. Because their audits are very, very successful, because over a 5-year period ending in 2024, auditors recouped $13.8 billion in unpaid taxes. This is just New York State. And the total New York City budget, I looked this up because I was curious. The total 2025 New York City budget was $112 billion. So for all these, millionaires and billionaires making a big stink about wanting to move because they don't want to pay 2%, 30% of that budget goes to education for public schools and education services. 22% goes to pensions and employee benefits for the 300,000 employees of New York State. And the rest goes to, homelessness, mental health and hygiene, housing, a little bit for public safety. I'm very sick of this. This is an outrage. We have a socialist mayor who's going to tax us 2%. It's like, bro, it's 40 grand, 20 grand. That's half of that's what you pay for a one semester for your child to go to kindergarten. So I think we can afford the extra 2%.
Yeah, isn't it only the amount above $1 million
Yes,
as well?
it's the amount above. It's a there's a cliff, if you will. All right, let's move on. Anything else you want to say before I move on?
No, yeah, we're good to go.
Okay, let's talk about OpenAI finally letting employees donate their equity to charity, a bit behind some of these other AI companies that are in a major talent war. Thoughts on their lateness?
Their lateness, is it late? They're not even a public company yet. What's the...
So OpenAI has significantly delayed their employees' ability to donate some of their equity to charity. So Anthropic has had this in place for, I think, at least 2 years. And at Anthropic, up to 25% of your equity, Anthropic will match a donation of equity to the charity of your choice. And employees at OpenAI have been begging for this for 2 years, and they've denied. And finally they said, okay, fine, you can do it. And the article is about how it's basically just to keep talent. Because if you have that much money and you are getting these sizable 7-figure equity packages, you're probably going to want to donate some of it. I also found this interesting because OpenAI started as it was a public benefit corporation. So their whole mission started out as charitable for the public benefit,
right?
Nonprofit. Thank you.
I imagine it has something to do with them not knowing what type of entity they are before they could make those contributions, right? Like that would... Do they even pull that off yet? Is that done?
It is done. Yes, they were able to pull it off with California and Delaware in the past year. So yes, it took a long time, but employees were pissed.
Hell yeah. Yeah. Well, yeah, I think it's a lovely thing. I mean, everyone at OpenAI has got to be a billionaire at this point, right?
Everyone at OpenAI is a billionaire. I don't know if that's true. Although their share price did increase something like $83 between August and now. So yeah, it's looking things are looking up for them. What was the let's not be wrong thing? Like, if a year from now,
oh yeah,
OpenAI's stock price is higher, that will be a very good thing for employees.
I love this hedging.
We need a word for that. We
hedging.
What's the German word for wishy-washying so you're never wrong? We'll look it up. All right, finally, we have IPO scams. Did you read this article, this Wall Street Journal article? No, you did not.
It's a special episode of the Liquidity Event.
I see. Okay. We've got an article for the Wall Street Journal, how a push for more IPOs fueled a wave of scams. I found this fascinating. I actually did not know this. I usually consider myself pretty up to date on the comings and goings of public companies, but this one slipped through. So in the 2012 Jobs Act, there was this special carve out for emerging growth companies, or EGCs. So if you're small, I think it's like under $1.25 billion of revenue, you don't have to go through the arduous, expensive, long tasks of being audited and filing out certain financial statements to be listed on a U.S. stock exchange. So these EGCs basically kind of slipped through. And the intent was for US companies to be able to go public easier and faster because the number of companies going public has been declining. So this was an effort to reverse that. But what ended up happening? We ended up getting non-US companies, non-US EGCs slip through. And so this article is about how in the past year, Paul Atkins, who is running our lovely SEC, we have, since late September of this year, so in the past 3 months, the SEC has suspended trading in 12 companies' stocks. Basically, these stocks are being accused of listing as penny stocks and then pumping artificial growth into them, and then some folks potentially getting scammed. And Shane, where do you think these 12 companies are based? I think they're based in the US? They are not.
I'm gonna go third.
They are based in Asia.
Rhetorical question.
Rhetorical question. They are based mostly in China. So once again, we have deregulation in the markets aimed at pleasing some very rich donors, which has a very negative impact on the American consumer. So the people who lose in this are the day traders and the young folks trading things on Robinhood who think that they have an edge. And are like, oh, what's this new emerging company that I've never heard of? Let me plug it into this AI tool, and this AI tool will tell me, oh yeah, this is a really good bet, and I'm gonna use some of my hard-earned money to invest in this. And unfortunately, if you invested in one of these 12 companies, they halted trading and they actually pulled them off the exchanges. So should we go public? Should Brooklyn if I go public as an EGC?
Yeah, just find me $2 million to pay the auditors every year.
Okay. I think we can
And we'll go,
finance it from cash flow.
Yeah. You got a guy?
Might.
You have a strange obsession with going public.
Why is it strange?
Are there any other RIAs that are public?
Didn't Focus go public and then they went private?
Yeah, so what's the goal? Why do you want to go public?
I don't know.
You just love being audited?
I just want to try it. I like to try things.
All right.
I'm trying we like to test everything before our clients do it. So.
Spoken like a career changer. Going public sucks. It's awful.
Oh, what do you know
There's
about
like
going
no benefit.
For the record, Shane used to
What do I know about
Shane
going
used to
public?
do audits for public companies in Austin, Texas, which is sort of the DNA of Brooklyn FI and tech and stock options. So yeah,
I appreciate the ambition, is what I'll say. You will ring the bell one day.
It's not about ringing the bell. It's about going through the process. I like to feel things. I'm like,
you just like
you can ring the bell.
You like Sarbanes-Oxley?
Yes.
Boy, do I have a job for you.
I'm an open book.
Right this way to Big Four auditing.
No, thank you. I can't pass the the CPA exam without going back to college math. So that's going to be a no for me.
Yeah,
I did explore it.
About that.
I did explore it. Okay, yeah. I've got one more Reddit question for you.
Cool. This is a long one.
Yeah. What do you do when you have too much money sitting in your bank at a very young age? The TLDR is this person works at, I believe this is one of those people who has a few different W-2s because they work at a few different startups. And looks like they made a nice gain in their portfolio. And they have about $1.8 million in liquid assets. And before the obvious suggestions, this is their words, not mine. Buy tons of property? Hell nah. Park it in mutual funds or index funds? Hell nah. Gold? Hell nah. I'm not looking to play ultra safe, but I don't want to dump risk just for the sake of doing something. So I'm thinking, do I hire a private wealth manager? Does it make sense to approach a multifamily office? Or should I continue managing everything myself the way I've been doing so far? What do you think? What do you do with $1.8 million in liquidity?
Well, they have a big salary, right? They're making $500K.
Yes.
So every time we do a Reddit question, I always have to say what's missing from the overall financial planning aspect of how old is this person, right? They could be 70 years old. I doubt that they're 70 doing this question on Reddit.
It says a very young age, so let's assume they're 25.
Yeah, sure. Running multiple startups with a $500K salary. In that case, buy tons of property? Hell no. Parking in mutual index funds? Hell no. They're wrong.
Yeah.
I would just say that they're wrong about that. Do I hire a private wealth manager?
Yes.
Is the answer. And then the responses are always amazing as well. The top response, everybody hates wealth managers on the internet. It's really interesting what happened. I don't know who did that. Was it Ramit Sethi?
It was
or
Ramit
was it
Sethi.
the white collar investor that tried? All these engineers on Reddit just hate hiring help, which is such a bummer. Because like we said earlier, it is a big engineering problem, and they just don't. I think they see it that way, and so they think that they can fix or handle that problem themselves, because they do have the engineering mindset, and then they go down the rabbit hole and realize they don't know how to actually get this plan into production. It works on my machine is how I would compare this for any engineers listening here. Yeah, sure, you can code it up and you can get your own financial plan working on your own machine, but actually deploying it is the problem, and that's what we're here to do for you at Brooklyn FI. If I could translate for them. Anyway, the top answer is why hire a wealth manager at $2 million? Yes, dude, hire a wealth manager. You got other shit. You're running. What's the line that we're using this week, AJ? I run three
I've run three
companies.
companies. I don't have time to use charcoal.
Yeah, there you go. You take it from here.
Yeah, I think I'm with you there, and the Redditors, yes, the top comment was don't hire an advisor, but the other comments were like, what are you doing, dude? Yes, the answer is ETFs. Like that is the correct answer. You had one trade, you made a lucky bet, and you were rewarded, so you're probably gonna pay a bunch of tax on that, right? At least 25% considering his income, if it was long term, which I believe it was. The answer is put it in ETFs. And the best way to do that is to have someone help you do that so you don't mess around with it and eat into your own gains, because all the research that we do shows that the worst thing you can do for your portfolio is touch it. I think you brought this analogy up a while ago. I don't remember where this came from, but it's like the bar of soap. Like, how do you make sure a bar of soap doesn't shrink? Don't touch it. Just don't use it. Just put it in there. You might need to make some strategic trades once in a while, but you don't want to change the makeup of the bar of soap. We don't want to change the makeup of our portfolio. We don't need to. The U.S. stock market does so well on its own. Why are we messing around with nonsense? Also, just to be clear, folks, this person mentions family office. And I think that word.
I was going to cut you off to bring that up.
That word gets bandied around a lot. Just want to be clear what a family office is. This is typically when you have generational family wealth that is so big that you have to literally not even hire a wealth manager. You need to hire a team of wealth managers, tax accountants, business associates, bookkeepers, people to literally run your family's wealth because there are so many people involved and it is too complicated. For example, the Johnson family, the Walton family, these are families that have family offices. So if you have $1.8 million in free cash flow, I'm sorry to say, my friend, but that family office is not the right fit for you. They will laugh you out of their office.
Amen, sister.
All
I
right.
would say you don't need a family office until you're bumping up against the estate tax.
That's a great, which is
that's a rule of thumb.
22-ish million for 2025 at the federal level, right? 11 and 11. Maybe that number's a little stale. But that's what we're talking about.
I think it's 17 or something now. And they're not married, they don't have kids, so why are we worried about multi-generational stuff? Like, just let it go. Just focus on your startups and put it into index funds. You're already over indexed, like you're over concentrated in these positions of like these companies, the net worth. How much are the company's worth? Maybe we should figure that out as well. Like, I don't even know there's no balance sheet here. So it's hard to tell what to do with this cash that is also on your balance sheet.
Yep.
But it's such a cop out for me. That's me hedging. Speaking of hedging bets, like you said earlier in the episode, for me to say I don't know your age and I don't know your balance sheet, it is tough to give like real financial planning advice, and yet we do it every week.
We still do it.
Show up here.
We still do it because we just come back to this. We sound like broken records, but like that's because it works. People typically don't fire their fee-only financial advisors because they lost money. They fire us because something really bad happened in their lives that dramatically changed their financial situation that no one has control over. So usually
I just commented on this Reddit thread.
Oh, you commented? Oh, great.
You don't need a family office until you have a family.
Oh, you're so mean. That's how you want to start off 2026?
Yes, dude.
Oh, man. All right. I'm reading us out. I'm over this.
I'm not hedging. Whatever. Everyone needs to get a little bit thicker skin.
All right.
You asked.
Welcome to 2026, folks. We hope you have a glorious year. This has been the Liquidity Event. We are your hosts, AJ and Shane. You can email us your financial questions at liquidityevent@brooklynify.com. Weirdos can leave us a review. What stands? I can't find the spreadsheet. Leave us a review. We love you. See you next week. Bye.
Yeah. Welcome to the club. Bye-bye.